Do you want to do it in class or you are going to do it at home? 2-3.
As far it is the same, we
Yeah.
can do it at home, I think. And next week, maybe compare if we will have any question.
Yeah. And 3-1. Um, did you read about prepaid expenses? I think everybody knows what is prepaid expenses and unmade revenue, right?
I have written, yes, I have read. Well, looks pretty similar with my background. Pretty clear.
How about other people?
Yeah, I agree with Catherine.
Yeah.
Looks
Okay.
like a Turkey things.
Yeah. Prepaid expenses, you understand about unknown also, you know that, right? Unknown revenue?
Sorry, what revenue?
Unearned revenue.
On and what is that? On and revenue.
Unearned revenue
is on-hand earnings in IFRS. Suba? That's on-hand earnings.
unearned revenue is we are receiving money from customers as a prepayment.
Okay.
Yeah.
That is unearned revenue. Before we finish the services, we are requesting 25% or 50% advance, that kind of money, unearned revenue. You understand that one, right?
Yeah.
Unearned revenue is a liability account, especially hotels, air tickets, you are paying advance, right? That is unearned revenue for hotels and a ticket company. That is unearned revenue. After they earn, they are going to transfer to income revenue account. That is unearned revenue. We are going to do 3-1 and continue with
Excuse me.
Yeah.
May I ask a question regarding the 2-3 assignment?
Yeah.
Because I did it last night, and the only thing I was unsure of was the entry for date May 11th. So there are 3 sales on account, and at the end it says to record this entry as a compound entry. I don't know what a compound entry is.
Compound entries, instead of doing individual entry, you can do account receivable line by line individually, and the total sales you can put together. That is the combined entry.
I see. Okay.
Yeah, I'm going to show that.
No, it's fine. The explanation was simple. Thank you.
Yeah, so there should be 5 lines. So total sales and total taxes together, right?
Yeah, together. Yeah. Which exercise you're talking about?
Yeah, I have a question, please.
2-3?
Yes, 2-3. The entry on May 11th.
11. This is the one. See?
I see. Okay, yeah.
This is individually you have to put, because you have to know how much they paid each customer. The sales and HST you can combine together. We can go to 3-1. That also journal. If you do the journal, we can transfer to ledger. Do you want to read it? Anybody want to read it?
Page 31, right?
Page 31, yes.
Okay, the exercise is 31. Page, yeah. The following transaction for the L-brand company occurred during the month of October. Carefully analyze the transactions and then prepare the general journal entries, complete with suitable explanations. L-brand company uses the following accounts: bank, a receivable name of subleases prepaid, insurance prepaid of equipment, furniture, land, building, a/payable name, tax on sales, tax on purchase, mortgage payable, Max Elbrand capital, sales, purchase, rent expenses, salaries expenses, advertising, and telephone expenses. And right now the question 1, October 1st, Max Elbrand, the owner, started the business by investing 82,000 cash. It is, we should write bank account and the capital,
Okay.
right?
Yeah.
Okay.
Do you want to write it? Because we are going to use this one for the posting the ledger.
Okay.
This transaction we are going to transfer to ledger. If you write it, it's better to transfer.
Okay. Can I continue, or anybody want to continue?
You can continue if you want.
Okay. The second one is October 2nd. Bought land and a building, making a $4,000 down payment and signing a mortgage at Bank of Montreal for the balance of $60,000. Value of land $45,000. Value of building $55,000. Issues check 101 for the down payment. Firstly, we should write the building land. It is the building 6,000 and 40,000. It is 20,000, right?
60,000, right?
Yeah, it is 60,000.
Mm-hmm.
The bank payment, and 40,000 is making 40,000.
Bought the land and the building, making 40,000 down payment and signing the mortgage at the bank. And the Montreal for the balance 60,000 value of land. The balance 60,000. Value of the land 45,000. Value of the building 55,000.
Should I minus both, or should I?
No.
Building separate.
Building and no, so you have to separate because there are two different fixed asset, the land and the building.
Yes.
Because land you don't have depreciation, that's what you have to separate.
Okay.
Land and building is debit.
Debit is 55 or 60.
No, could you read it, please? That 60 is the mortgage, right?
Yes, 60 is mortgage. Yeah, Montreal Bank of
Mortgage,
Montreal. Yes.
And 40 is down payment. But the price of the land, 45,000. Building is 55,000. That is the
yes.
Yeah. How many accounts are affected by this?
I think so. 4.
4, yes.
The bank, land, building, and I don't know, and land, right?
Mortgage payable. So
You have
basically,
the accounts. You have the accounts, right? Mortgage payable.
yeah, you have to use the chart of accounts. So there's a different one for land and building, right? So
Yeah.
you have to use those.
You have the list of accounts.
Yes, bank, building, okay, mortgage payable, and bank, building, mortgage payable, and I don't have an idea any there.
No, there are 4.
Land, yeah, land. Bank, land, building, and mortgage payable, right?
What are the debits?
Debit is, okay, 55.
No, what accounts are debit, what accounts are credit?
So credit is 60. No,
the account names.
Account name is mortgage payable.
Yeah, mortgage payable and
Okay, and land and bank. We should use, yeah.
These are credit.
The mortgage is credit, yes. And bank is credit, yeah.
Land and building, they are debit.
Yes, land and building. Okay. Okay. Okay, and October 4th, bought a desk and chair for the office, 1050 plus tax, check 102. We should use bank and furniture account, right? Okay, furniture is debit, credit is bank.
HST?
HSD is, yeah, and okay, maybe someone wants to do anything. Catherine, Ashkan, Mohammed.
Sorry, I have background noise tonight.
Okay, I'll read it.
Okay, good.
Okay.
Okay, October 6th. Bought merchandise from C. Broughton and Co. 1,725 plus HST of 224.25. Check number 103. So for this, we're going to debit the purchase account, and then we're also going to debit the HST.
Yeah.
And then the credit will be the bank.
Yeah.
Keep going.
Yeah.
Okay. October 6th again. Bought a printer, $545, and supplies for the office. Office supplies prepaid for 265.20 plus HST of 105.33. Purchase invoice number 342 from Kirkfield Equipment. Term net 30. So this is a compound entry. So office supplies prepaid will be debit. Office equipment will also be debit. And then we'll do HST on purchase for debit. And then account payable Kirkland Equipment will be credit. So 545, 265.20, 105.33, and then 915.53.
Yes.
So October 8, bought merchandise from Riverside Company on account for 1,894 plus HST of 264.22. Purchase invoice number 306, net 10 days. So for this one, once again, we'll debit the purchase account for 1,894. Then we'll do HST on purchase debit also 246.22. Account payable Riverside will be the credit side for 2,140.22.
Yeah.
October 8th, paid 1,200 to General Insurance Co. for a 1-year fire insurance policy. Check number 104. So for this, we're going to put insurance prepaid will be the debit account. The credit account will be the bank account. So 1,200 on each side.
This one?
Okay, yeah, because you're like writing it down every month. So you have to do insurance expense. So you're like writing it down every month. So it's like 900, 100, and then 2,000.
You can show one month insurance expense. The rest is you can send it to prepayment. Yeah.
So October 10th, sold merchandise on credit to Brad Abbott, 1229 plus HST of 159.77, term net 10, sales invoice number 10.
Mm-hmm.
So you will debit like the accounts receivable for Brad Abbott
Mm-hmm.
for 1,388.77, and then sales will be 1,229 on the credit side, and
Mm-hmm.
HST on sales will be 159.77.
Mm-hmm.
Keep going, or should I stop?
Mm-hmm.
Keep going?
Yeah.
Okay. October 11th, sold merchandise for cash for $832 plus HST of 108.16. So the bank will be the debit side, the sales
Mm-hmm.
and HST on sales account will be the credit side.
Mm-hmm.
Sales will be 832, HST on sales will be 108.16, and bank will be 940.16.
Yeah.
October 14th, paid 155 plus HST of $20.15 to local gazette for advertising. So the debit side will be advertising
Yeah.
and HST on purchases, and the credit side will be bank, and the total will be 175.15.
Mm-hmm.
October 15th, paid salaries, bookkeeper 650, sales representative 700, checks number 106 and 107. A separate salary expense is required for each employee. Record this as a compound entry. So we'll do two salaries, like
Yeah.
so two debit accounts.
Mm-hmm.
So salaries expense, like two
Mm-hmm.
of them, and then the
Mm-hmm.
credit will be one bank account.
Mm-hmm.
So it will be 700, sorry, 650, then 700,
Mm-hmm.
and then the total will be 1350, and then you'll just make a note saying that 106 is to the bookkeeper and 107
Yeah.
is to the sales rep.
Excuse me. Sorry to interrupt. I have a question. I guess I have two questions now.
Mm-hmm.
In terms of formatting, is it necessary to tab the credit accounts? Because I noticed
Yeah.
now we're not doing that. I don't know if we just missed
Yeah.
it. Or...
Yeah. No, it should. Yeah, we have to.
Okay. Sorry.
Yeah.
Go ahead.
The thing is,
Well, so you don't have to do it now. I just wasn't sure if it was.
yes. Yeah.
Okay. And my second question then, brought up by this example, was: do the debit and credit accounts have to be grouped together? So, for example, the two salary expenses.
Yeah. The
should they
compound.
be first and second entries in the two bank?
Two bank we have to put according to this. They ask you to put together.
Right.
But I am doing separately because it's easy to do the bank reconciliation at the end of the month. That's what I'm doing.
I see. Okay.
Yeah.
But if you were to do it as a compound entry, would the two salary expenses be the first two lines?
And
so
then the bank
so the debit accounts
like,
be grouped
yeah.
together?
Yeah. And see, yeah.
Hello, so sorry to disturb. I just have a question for you. I know you've got your own laptop, but would you prefer to have one that we set up for you?
Is somebody reading? I can't hear the person's voice.
Maybe you can delete.
No, I think he's on the phone.
Should I read?
Which one laptop?
I'll just call me during the break, Matilda. Sorry.
Yeah. 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 Bye. Excuse me? Sorry, because I got a call from the office. That's it. Okay. Which one you are doing now?
October 18th.
Okay.
Okay. So received 1,388.77 from Brad Abbott on account for sales invoice number 10. So this time we'll debit the accounts receivable, and then we'll debit the bank, and then we'll credit the accounts receivable from Brad Abbott.
Yeah.
So bank debit of 1,388.77.
Yeah.
And credit accounts receivable for 1,380.
Account receivable, yes.
So
I have a question, but they didn't say it is cash or check. How can I understand that it is I should use the bank account for that?
So this is actually from before, right? So I think it's example number, because hold up, let me find where it is. Because this person bought something from us before, and then
that was on the 10th.
Yeah, on 10th, right?
Okay, 10. Okay, 10. Okay.
So a good way to do it is if you're using Excel, just use like a search function, right?
Yes.
Like
okay.
Then you'll see it.
Okay. Thank you, guys.
So October 19th, bought merchandise from C. Broughton and Co. for 1,525 plus HST of 198.25 on credit. So this means we are debiting merchandise and debiting HST on purchase. So 1,525 plus 198.25. Then we're crediting accounts payable for C. Broughton.
Yeah.
So that would be 1,723.25.
Yeah.
So October 20th, paid Riverside Company 2,140.22 on account. Check number 109. So again, this is also from previously before. So we're going to debit the accounts payable for Riverside, and then we'll credit our bank account for 2,140.22. So October 23, sales on credit.
This is related to this. You are asking about the last question. This is related to 8.
So, hello, Matilda.
Yeah.
Miss Val would like you to let her in, please.
Pardon me?
Join the class. Miss Val, she's waiting to be allowed into the class.
Oh.
Yeah.
Okay, sorry. Next one. Thank you.
Okay, October 23rd.
Mm-hmm.
Sales on credit. Martha Capelli, 164.5 plus HST of 21.39. Tim Dunphy, 146 plus HST of 18.98. Michelle Parent, 132.50 plus HST of 17.23. So sales invoice of 12, 13, and 14, respectively, net 30 days. So we're going to debit 3 accounts. Accounts receivable for Martha Capelli, accounts receivable for Tim Dunphy, accounts receivable for Michelle Parent, and then we'll credit sales and HST on sales. So we'll just combine all the sales together, and we'll combine all the HST on sales together.
Actually, I put separately.
Okay.
You can do together, doesn't matter. Okay. But when we are recording the ledger, yeah, you can do it also, doesn't matter. You can do it compound.
Yeah, because like when we're doing like a ledger entry, we're just going to transform HST in one column anyways, right?
Yeah.
Should I start reading again?
Mhm.
Okay. Paid the first installment on the mortgage withdrawn by the bank of 900. Interest of 600 is included in this payment. So we'll debit mortgage payable for
Mhm.
300
Mhm.
and then debit account interest expense of 600.
Mhm.
And then we'll credit our bank for 900.
Mhm.
Matilda, so one thing I noticed is like in the chart of accounts, there's
Uh-huh.
no account called account interest expense.
We don't have interest expense.
No.
Along with what we're doing?
Yeah, yeah.
Great stuff.
So we'll
But
just
we
go
have to
create.
have interest
Okay.
expense. I think it's missing.
Okay. So we'll just create. I think it's also the same for like number 8 when you're like writing down the insurance policy.
Mhm.
I don't think there's like the account you entered. Like I don't
Mhm.
think that exists in the
Insurance expense also is not there, right?
yeah, yeah.
Yeah.
So draw a picture of what you think it
You
would
can put everything together as a prepayment, but if you do the expense at the same time, when you are doing the adjustment, you don't have to do that.
Okay.
Yeah. But I did the expense at the same time. There are two accounts are missing, right? One is insurance, one is interest.
Yeah, one is account interest expense and the other is like
Yeah.
insurance. So October 31st. Paid salaries. Bookkeeper 650, sales representative 700. Check number 10 and 11. So once again, two debit entries, salaries
Mhm.
expense, 650, and then another one for 700, and then
Mhm.
the bank for 1350.
Mhm.
That will be the credit side.
Yeah.
October 31st. Paid telephone bill for October to December for $450 plus HST of 558.50. Check number 112. So the debit side will be the telephone expense and HST on purchase.
Mhm.
And then for the credit, we will just add them together. It will be 538.50.
Actually,
No,
paid telephone.
508.50.
Yeah, paid telephone bill for October to December,
Okay.
right?
Okay.
But you are doing for October transactions.
Okay. Yeah.
The November, December has to be prepaid.
Okay. So basically, this will be prepaid expense of 450.
No, not everything. You have to calculate how much for October.
Yes. Yeah. So
Yeah.
prepaid expense of 300 and then
Yeah,
telephone expense of 150.
150.
Yeah.
Yeah, and also HSTV you can put together.
October 31st. You received a statement from C. Bratton and Co. showing a balance of 1,836.25, more than the balance shown in the book. You confirm that we under-recorded the purchase of the merchandise on October 19th. Make the correcting entry in your journal and then make a payment to the company in full of account.
Mhm.
So basically, we'll just copy and paste like the thing from October 19th.
October 19th, yes. Then first you have to reverse this entry.
Yeah, so we'll copy and paste, and then we'll do reverse, and then
Yeah.
we'll put the reversal and the new one in
Yeah.
the journal.
Yeah. The first you are going to reverse this.
So to reverse it,
Yeah.
you have to like put in like a correction thing there.
First,
So
yeah.
okay, so in this side, account payable C brought in will be
Yeah.
debit
Yeah. That is your reversal.
1,723.25.
Yeah.
And then HST on purchase and merchandise will be the credit side.
Credit side, that is the reversing. Now you are going to calculate because they send the total in the statement.
Yeah.
You have to calculate HST also to.
Yeah, so then we'll do a new journal entry. Account payable will now be 3,559.50.
Yeah, yeah.
And merchandise will be 3,150. And HST will be 409.50. So HST.
What? The total is
3,000.
1,836, right?
No, you have to add 1,836 to what we have.
No. No, showing the balance of only the balance is 1,835.
No, it's saying, so Matilda, if you read the whole sentence, it's saying showing a balance of 1,836.25 more than the balance shown in the book.
Yeah.
So it should be 1,836.25.
Now, in our book, it's showing 1,723.
So I'm saying we should add those two, correct?
No.
I think I do understand, but I think there should be a comma there, right? So I don't think it's $1,800 more than what you paid. I think it's 1,836, comma, more than the balance shown in the book.
Yeah.
See what I'm saying?
Okay. So if it's more, then okay. If
It's
there's a
more.
comma, okay.
Yeah. Yeah, the comma is missing. In that case,
so it'll be 1,625 for the merchandise then.
Yeah.
Then the HST will be 211.25.
Yeah. Now you are going to transfer to ledger. Everybody understand what is ledger, right?
Yes, I have a question for the last one. They write the 1,836.25, and I am looking the 19. It is 1,555. I want to need the minus both. I calculate that is 311.12, right? Why we are writing 211.25?
That is the HST. We have to divide 1.13. If you divide 1.13 of the total of the
okay,
then you can find out the price subtotal. If you minus the subtotal, that one is going to be 211.25.
Okay, I understood right now.
The subtotal.
Yes.
Divide by 1.13.
Yeah, I thought 19 is totally correct. Then I got it right now. Okay, thank you.
You're welcome. Everybody understand about what is the ledger, right?
Yeah.
Do you want to read the ledger? Mohammed?
Sure. So, general ledger. The entire group of accounts maintained by a company is called the ledger. The ledger keeps in one place all the information about changes in each account. Companies can use different kind of ledgers, but every company has a general ledger. A general ledger contains all the asset, liability, owner's equity, revenue, and expenses account. A standard general ledger sheet includes columns for date, description, journal reference, debit, credit, and balance, as shown in the example below.
Yeah, you can see the example.
Yeah.
Uh,
So the example shows the bank account, which is on page 1 of the ledger. The name of the account bank and its account code are also shown in the heading. So the next line shows the headings used for each of the ledger accounting transaction entries. The first column is the date column. The date of the transaction is what you put in there. The second column is the details column. You put in the details of transactions such as a reference to the journal or an indication of account containing the other side of the double entry. The third column is reference. So you reference to the book of prime entry or journal. At this stage, a similar reference back to this ledger is added in the book of the prime entry. The fourth, fifth, and sixth sides will be debit, credit, and balance. Only the final 3 columns include monetary amounts, and for this reason, the format shown is referred to as a 3-column general ledger.
mhm. And also they're showing how to post from the journal. The first table is the journal. That journal has 2 ledgers. One is bank, one is capital. And they're showing how you have to record. The narration has to go to description or explanation for both the ledger. And according to debit entry goes to debit entry, credit is going to credit entry. Every time when you record debit or credit, you have to calculate the balance also. Then especially in the bank balance, owners or anybody want to see how much is in the bank, they can see immediately in the ledger, and also how the changes come, they can identify from the explanation. Right? Then we are going to transfer the ledger. I think I send the ledger also for you, right?
Yeah.
The blank sheet.
Yes. Mm-hmm.
The blank ledger. We are going to start doing that. The first journal, everybody has the journal now, right? You can copy
Yes.
and paste. You can copy and paste. It's easy in the ledger instead of writing. The first one is bank and capital, and also this is the explanation. This is going to the ledger 1. See, this is the explanation. The first you have to record your year, then date, then the explanation, and then this is the folio number or reference number. This one is coming from here. It's coming from page 1. If you have the journal number, you can put the journal number. If you don't have the journal number, you can use the page number. The page number 1. And the balance is 82,000. And then you have to go to capital. When you see the ledger, the first portion is assets. The second portion you have liabilities and purchase, HST, and those things. The third portion is some of the expenses. And in the second portion, you can see capital. Okay, this is the capital. Capital also you are going to bring the date and then the explanation. And this is the page number. According to this is our credit balance. Then it has to go to the credit side. And the balance is 82,000. And this one is because our liabilities and the owner's equity and revenue, its normal side is credit. Then you have to put the credit balance. And the bank also, this one is our debit balance. We have to record as a debit balance. Until you get minus balance, this one is going to be debit balance. Okay. Are you recording? We are going to record in two ledgers. It's easy to copy and paste. After you record in the ledger, the journal also you have to give the folio number. That means which ledger you recorded those information. That is this. Actually, nowadays nobody is doing manual accounting, but when you are studying, you are learning the manual accounting. The manual accounting rules is you have to follow. That's what we are doing. But in the real life, computer is generating everything automatically, and also it's showing all the information by itself. After you record, we can go to the second one. Second one is there are 4 ledgers. One is land, building, bank, and mortgage. Go to land. Land and the narration, page number, and debit entry. The balance is 45,000 debit. And the building also the same thing. Debit, folio number 1.
I have a question. Balance should be automatically calculate, or should I write the manually for balance sheet? Like a land. Like yeah.
Balance sheet?
No, not balance sheet. Can you go to like a H 83?
Page 83?
Yeah, H 83. 55. Can you see that, right? It should be automatically calculate, or should I write manually that one?
Oh, yeah, you have to write down.
Okay, it is not automatically. Okay.
No. In Excel, the first time when you put a formula, then it comes automatically. This one, you can put equal and click this cell, then it comes automatically. The next line, when you are doing the next line, you have to do the formula. Then if you copy the formula, it will automatically come. I will show in the bank. Land and building, you don't have to worry about that. Go to bank, the third line. The bank is...
Yeah, just it is about the bank, yeah?
Yeah, this one. You can use the formula equal sign.
Equal.
The equal sign H4.
Yes.
Plus E4. Minus E4.
Yes.
Plus E4 and minus F4. Then press enter, your answer will be there.
Yes.
Then next, when you're doing the next line, you can copy the same line, same thing, then it will automatically come. You don't have to.
Okay.
In
Yeah.
the,
Thank you.
that's what I gave
Yeah.
the Excel. It's easier for you.
Thank you so much.
You're welcome. See, this is the formula. Equal, it's 4 plus 5. Because whatever we have debit, we have to add. The credit, we have to minus, right? That's what the formula.
It is.
Yeah. And this one is also debit balance. Next one is the mortgage. Mortgage in the second portion. Mortgage, when you're doing the liability, the formula should be different, like plus credit side minus debit side for liabilities.
Yeah.
Mortgage is this. And then go back to journal and put the account number. This is the cross reference. In the future, anybody want to check the journal, then they will know it's coming from which journal entry or it's going to where. Everything you can see from there. This is the cross reference. Do you want to do it by yourself?
Yeah, I'm doing right now.
It's
not easy.
Pardon me?
Yeah, it is not easy because of I need to check the name, right?
Yeah, that one. If you know where is the ledger, the first portion, the second portion, and third portion. The first portion, everything is asset. The second portion, liabilities and some of the capital and revenue and expenses. The third portion is 2, 3 expenses. And if you want to do it at home and finish it, that's fine. We can go to the next exercise if you like it. Normally, the people, those who don't have a accounting background, I always ask them to do in the class because if they need any help, I can help. For you people, you are advanced in accounting. But if you want to do it, you can do it. Otherwise, we can go to the next exercise. Then you can try at home. Which one you like?
Are you asking if we should create a ledger for all of exercise 3.1?
Yeah.
Oh, I think it would take too much time to do it in class.
Yeah, that's what I'm asking.
Yeah.
You can do it at home.
Okay.
Whenever you have time, because our next class is going to be next Tuesday. Then
Yes.
Whenever you have time, you can do it at home. I will send the answer to calc. After you finish the ledger, you are going to prepare the trial balance from the balances. This is also you are finishing the cycle. From the trial balance, creating the income statement and the balance sheet. That part, if you want to do it in the class, I think you are wasting the time. If you want, we can go to the next exercise. If you like.
Okay.
If you want to do it now also, that's fine for me. I can help you whenever you have any problem.
Yeah, in my opinion, I think so. Exercises 3/1 and ledger 3/1 is okay. I can do myself after the class.
Yeah.
However, I am not ready exercises 3+2 because firstly I need to finish before exercises.
Okay.
I am sorry about that. Yeah.
Because you already finished the journal.
Yes.
Ledger you are going to copy from journal to ledger. If you focus on the next exercise, ledger you can do it at home. That one is you know how to do it, right? How about other people? How about others?
I think the ledger will take too much time because like we have to go from one sheet to another, right?
Yeah.
So it will like take too much time.
And
if everyone wants to go to exercises 3/2, we can go.
Yeah, because if you look at exercise 3.2, it's like journal entry anyways, right? It's not like it doesn't have anything to do with like ledgers.
No, that's a journal entry. That one is about unearned revenue.
Yeah, so it doesn't really have anything to do with ledger. So even if you don't like fully understand ledger or like you're still reviewing ledger, like it will like not affect you like understanding 3.2. So.
Okay. Do you have any questions about ledger before we move to unearned revenue? Any?
I don't have any question. I'm Tuba. I'm okay.
Good.
I need to practice with that. Okay. If I need a question, I will ask. Thank you.
Okay. Then we can go to 3-2, right? 3-2, that is about unearned revenue, accounting for unearned revenue. Do you want to read unearned revenue? Anybody?
Sure.
Okay.
So unearned revenue is money received from customer for work that has not yet been performed. This is advantageous from a cash flow perspective for the seller, who has now cash to perform the required services. Unearned revenue is a liability for the recipient of the payment. So the initial entry is a debit to the cash account and a credit to the unearned revenue account. Accounting for unearned revenue. As a company earns revenue, it reduces the balance in the unearned revenue account by debiting the account and increases the balance in the revenue account by crediting it. The unearned revenue account is usually classified as a current liability on the balance sheet. If a company were not to deal with the unearned revenue in this manner and instead recognize it all at once, revenues and profits would initially be overstated and then understated for additional periods during which revenue and profits should have been recognized. This is also a violation of the matching principle, since revenues are being recognized at once while related expenses are not being recognized until later periods.
You understand that part, right? Because of that, we have to put everything in unearned revenue. whenever we earn, we are transferring from unearned to a revenue account according to the matching principle. Someone was asking yesterday, we have to know about matching principle. This is also one of the reasons you have to know the principles. Exercise, and also there is an example about journal bank and unearned revenue.
Yeah.
So now you can do the exercise 3-2.
The Starline Theatre, owned by Lee Baroni, is unique as it only shows movies that are part of a theme with 2 or more sequels. As of February 29, 2019, the ledger of Starline showed the following. So there's like a ledger, like a balance sheet there, chart of accounts on page 34.
You have the balance sheet that is the previous accounts,
Yeah.
and you have the chart of accounts.
Yeah.
Now we are going to start with the
From
exercise.
March. So on March the 2nd, acquired 3 Lord of Rings movies to be shown in the first 3 weeks of March. The film rental was 27,000 plus HST of 3,510. Of that amount, 10,000 was paid in cash, and the balance will be paid in March 10th. So, one debit account will be film rental expense. So that will be 27,000. Then HST also will debit it. Then we'll credit the bank account for $10,000. And the remainder, like, so minus, like, the total minus like 10,000, we'll put it like in a accounts payable, I guess.
Account payable, yes.
So the number will be 20,510 in the accounts payable. And then you can just make a note like on March 10th.
Yeah.
So March 3rd, ordered the Indiana Jones movie to be shown the last 10 days of March. The film rental will be 300 plus HST of $39 per night. So again, we'll do film rental expense.
Ordered, right?
Sorry, say that?
Ordered the movies.
Okay. In that case, like there's no transaction that took place.
No transaction,
So
until you have cash transaction, you don't have to do it.
Okay, yeah.
But in this software, you can do it in the purchase order or something like that. But this is not the real transaction.
Yeah, so it's not a transaction, so we'll just ignore that for now. Okay.
Yeah.
So March 9th, received 16,300 plus HST of 2,900 plus HST of 2,119 cash from admissions. So we will debit the bank side, and then we will credit the admissions revenue as well as HST from sales.
Yeah.
So 16,300 plus 2,119 will be credit, and then the debit side will be the bank. You just have to add the two numbers.
Yeah.
And that will be 18,419.
Yeah.
Paid the balance. So March 10th. Paid the balance due on Lord of Rings rental and paid 3,000 on accounts payable from February 29th. So we'll do 2 lines of debit for accounts payable from February 29th. And then accounts payable for Lord of Rings. And then we will credit the bank account for 3,000 plus whatever was remaining for the Lord of Rings thing. And we'll make
that one is 20,510, right?
Yeah, 20,510.
The first transaction, yes.
Yeah.
You can see the balance sheet. There is accounts payable $12,000. Now they are paying 3,000 from that amount, right? I did put the narration. You can do the narration by yourself.
Okay. So March 10th again. Sold gift certificates totaling 5,100. So you'll debit your bank account for 5,100 because there's cash. And then you will do unearned revenue, and then we will credit that for 5,100.
Yeah, good.
So March the 11th, Starline Theater contracted with Brewer Company to operate the concession stand in the future. Brewer is to pay 18% of the concession receipts payable on the last day of each month for the right to operate this stand. So once again, this is not a transaction.
Yeah.
This is
This is not the transaction. This is a contract.
contract, yeah.
Good.
So on March 12th, paid advertising expense of 950 plus HST of 123.50. So we'll debit the advertising expense account, and then also HST on purchases will be debit, and then we'll credit our bank account for 1,700 and 1,073.50. Okay.
Yeah.
March 20th. Received 16,600 plus HST of 2,158 cash from admissions. So in that case, like we'll debit our bank account, but we have to add the sales and the HST first.
Yeah, the
That will
total
credit
amount.
it. Yeah. So credit sales account. Sorry, credit admission revenue for 16,600 and credit
Yeah.
HST on sales for 2,158, and then add
Yeah.
them together, 18,758.
Yeah.
March 21st. Received the Indiana Jones movies ordered on March 3rd and will pay rental fee of 3,000 plus HST 390 within 10 days. So this is accounts payable. So we'll do film rental expense will be debited, which will be 3,390. Then accounts payable to, who is it? So I guess we don't know the name of the company. So accounts payable will be 3,000, and then HST on sales will be 390. And then we'll make a note that we'll pay in 10 days. March 30th. Paid the balance due from February 29th, 9,000 on accounts payable. So we will debit the accounts payable for
Yeah.
9,000, and then we'll credit our bank for 9,000. And then we'll make a note saying that it's from February 29th accounts payable.
Yeah. Yeah.
Okay. Received statement from Brewer Company showing receipts. Received statement from Brewer Company showing gross receipt from concession of 8,500 and the balance due to Starline Theater of 1,530. So that's the only number we should care about. 1,530 for March. Brewer Company paid half the balance and will pay the rest on April 10th. So we'll have to debit two accounts. One will be a bank account and one will be accounts receivable.
Yes. Yes.
So we will do half and half.
Yeah. Half and half. Yeah.
Right. So 1,530 divided by 2, and then 1,530 divided by the accounts receivable thing.
Yeah.
And then we'll credit the concession revenue for 1,530.
Yeah.
March 31st. Customers used $900 valued gift certificates and cash. 117 HST for admissions. Is 117 for the HST or like does cash?
170 gift certificate, 900 valid gift certificate.
Okay, and cash. Okay.
And cash.
Okay. So customer used
HST they paid the cash.
Okay.
The gift certificate for the admission.
Okay. Okay, I understand, sir. So March 31st. Customers used $900 value gift certificates and cash 117. HST for admissions sold on March 10th. So this time, gift certificates are like unearned revenue, so we'll have to debit them, correct?
Yeah.
So we'll have to debit the unearned revenue.
Unearned revenue, yes.
For $900. Then we will also, then we have to do the credit side. So
No, we are receiving the cash,
cash,
right?
right? Do we have to
Yes,
calculate the
24.
HST?
Yeah.
We have to calculate the HST, right? So
Yeah.
we have to, on the credit side, we'll have to do cash plus.
No. We are receiving money for HST,
Okay.
right? Then this one bank is debit. We are receiving the money.
Okay.
Now your revenue and expenses,
Okay. Okay.
admission revenue and HST on sales.
Okay.
That one is going to be because gift certificate is not enough for the HST. That's what they are paying money for HST. Yeah.
Okay, so this is not like a real life where like if you give like a gift certificate, like the HST will be included. Okay. I guess like when they first bought the gift certificate, they didn't like pay HST, I guess. No, because I'm looking at the March 10 transaction. They didn't pay HST, right? So okay, that's why. So finally, March 31st. Sorry about the confusion. March 31st, paid 1,250 mortgage payment and $475 of interest. So we will debit the mortgage payment. We'll debit the interest expense account.
Yeah.
And then we'll credit our bank for the total amount of 1,000.
In this lesson, we are learning about unearned revenue, how unearned revenue is working. Yeah. After you finish, we can go to returns, allowances, sales discount, purchase discount, and purchase sales.
Excuse me, can you go into a little bit up, please? I missed something. I need to check my comments. Yeah. Thanks.
Yeah.
Can you go into a little bit down? Okay, I did. Thank you so much. It's okay right now. Yeah.
Now we can go to the next exercise.
Okay.
remember reading again?
Yeah. Next exercise, that is 3-3.
Okay.
Yeah.
So exercise 3.3. Record the following transactions in the general journal, complete with appropriate explanations. Return and allowances on purchases and sales of merchandises are to be recorded in the purchases return and allowances and sales return and allowance account. Okay, so chart of accounts.
Chart of accounts you can see. Yeah.
So January 3rd. Bought merchandise from Gladwell Company, 1,250 plus HST of 162.50, invoice 498 and 15. So
it is purchase, right? Purchase merchandise and HST and bank. Bank is credit, other are is debit, right?
This is terms and 15. That means you have due date for 15 days. You have the term of N15.
Oh, yeah. Okay. Yeah, I missed.
So it's accounts payable, right?
Yeah, you're not paying.
Yeah, accounts.
Accounts payable.
So we'll
account payable.
And then accounts payable, Gladwell. It's the first
Yeah.
name of the company.
We didn't pay yet, right?
Yeah.
January 4th. Sold merchandise to JD North 450 plus HST of 58.50. Invoice number 105, terms and 15. So we will debit the account receivable or AR receivable JD North, and then we will credit purchase merchandise and HST sales and then add them together.
Sold merchandise, right?
Sorry.
The sold merchandise. Yeah, sold merchandise. HST.
That one is sales.
Yeah, so just sales. So HST
Yeah,
on
the
sales and the
sales.
sales will be the credit side.
Yeah.
January 4th. Bought laser printer from Staples, 895 plus HST 116.35. Invoice number 323, terms and 30. So this office equipment will debit that. And then we'll credit accounts payable to Staples.
And HST also here.
HST, yeah. January 5th. JD North returned goods worth $40 plus HST of $5.20. A credit note was issued. So we're doing sales return.
Yeah, January 4th transaction, related to January 4th transaction.
Oh, it's returned to January 4th. Okay.
Yeah.
Okay.
Yeah.
So, okay, in that case, we'll have to debit the accounts payable. No, sorry, accounts receivable. 1 second, hold on.
Not account receivable. Because this one,
So, sorry,
this is the one you are going to reverse it.
Yeah, my mistake. So we're going to debit sale return and allowances.
Yeah.
And then we'll credit the account receivable from JD North.
And HST also.
Sorry, we're also.
Yeah. Because sales returns and instead of sales, you are going to use sales returns and allowances.
Okay, so we'll
just
put 45.20. Okay.
Yeah. And HST on sales, and then the return. You are going to reverse the same entry with a different number, different amount.
January 5th. Invoice number 323 received from Staples shows an overcharge of $50 plus HST of $650. Received a credit note. Overcharge must be charged against the account that was debited originally.
Mm-hmm.
So accounts payable, we're going to debit that.
Mm-hmm.
So accounts payable staples,
Mm-hmm.
we'll debit that for $450.
Mm-hmm.
Then debit also HST on purchase,
Mm-hmm.
and then
Now, this is, you're going to debit, accounts payable is going to be debit,
yes,
and credit is office equipment and HST. Because,
yeah. January 6th. Bought merchandise from Stone Company 1,165 plus HST. Invoice number 528. Terms 2% within 15 days.
mm-hmm.
So
There are
accounts,
two conditions here, right?
sorry,
There are two conditions. One is 2/10 and then
sorry,
15.
2/10, then net 15.
Yeah.
So we bought merchandise. So accounts payable to Stone for 1,165, and then HST on purchase. So, sorry. Merchandise will be the debit side,
Mm-hmm.
and the accounts payable with the credit side.
Mm-hmm.
January 6th. Merchandise worth $80 plus HST 10.40 bought from Gladwell. Invoice number 498 was poor quality. Received a credit note. So is this related to the previous one? No, right? It's just like a new transaction?
Related, no, it's related to this one.
Oh, the first one. Okay.
Mm-hmm. The fourth. Oh, this one, first one.
January
Yeah.
3rd, right? Okay.
Yeah.
Okay. So we'll have to debit the accounts payable for
Yeah.
$80, and then we're going to credit the.
Instead of purchase merchandise, you are going to use purchase returns and allowances.
I have to keep flipping back and forth.
Yeah. We are going to reverse the same accounts with a different amount, but instead of purchase, you are going to use purchase returns and allowances.
January 7th. Cash sales for the week 767.25 plus HST of 99.74. So we're going to debit the bank account,
Mm-hmm.
and then we will credit
Sales.
Mm-hmm. And HST on sales. January 8th. A customer who bought goods for cash returned $25 plus HST 3.25 worth and was refunded the money. So we will debit sale return and allowances.
Yeah.
For $25.
Mm-hmm.
And then we will credit
the total money. Mm-hmm.
We're giving money, right? So we credit the bank.
Yeah.
For the two amounts. Yeah.
The total amount.
Yes. January 10th. Issued check number 75 to Stone Co. to cover the invoice of 520. Sorry. January 10th. Issued check number 75 to Stone Co. to cover the invoice number 528 of January 6th, less the discount.
Mm-hmm.
Where's check number 75?
The discount, when you are calculating the discount, not for the HST, only for the price, right?
Okay. But it says issued the check of 75, right? Where's check number 75?
Yeah. Issued check number 75 to Stone Co.
Okay.
This is the one, number 6. See,
Oh,
this is
January.
the when we are calculating the discount, we have to calculate the discount only for this, not for the HST.
Okay. Yeah. Okay.
And then you have to find out how much you are going to pay.
Okay. Well, that was the one with terms 2%. Okay.
Yeah.
January.
This is the accounts payable. That is the total amount is going to be debit. It's going to write off. Purchase discount is this multiplied by 2 is 2330, and the bank we are paying only this much money.
January 10th. Bought merchandise 1,285 plus HST of 167.05 from Brill Manufacturing. Issued check number 76. So we are debiting purchase merchandise, and then we'll credit our bank account. So sorry, we're going to debit merchandise plus HST, and then we'll credit our bank for the total of those two amounts.
Yeah.
January 11th. Return $120 plus HST, 15.60 worth of merchandise bought on January 10th. Received a cash refund. So we will debit the sale, return, and allowances, as well as the HST.
Actually, you are receiving money, right?
Okay, so we have to cash plus the HST will be on the credit side.
No. You are receiving money, the total amount,
Okay.
and that is your bank account is going to be debit. Yeah, bank account is going to be debit, and
because it is refund, right?
Okay.
Yeah.
Okay.
Which is discount and allowances is going to be credit, and HST on purchase also credit.
January 13th. Issued check number 77 to Gladwell Co. to cover the invoice number 498 on January 3rd, less the credit note. So we're going to credit our bank account.
Yeah, see?
Then we're going to debit
the... This is the one we have discount and credit also. See? This is the original invoice.
Yeah.
Then we return something here. In that case, we are going to pay this minus this amount because we return, right?
Okay.
Yeah. Original invoice minus return amount. That is the amount we are going to pay. In this case, when you're doing the this kind of transaction in the computer will show exactly how much you're supposed to pay. But here, manual accounting, you have to calculate.
January 16th. Sold merchandise to John Torino, 320 plus HST of 41.60. Terms, net 30. Invoice number 129. So we'll debit the purchase merchandise account as well as
sold merchandise, right?
Oh, sorry, sold merchandise. So account.
Yeah.
Sold merchandise. So we have to debit the accounts receivable for John Torino.
Yeah.
And then we have to credit 320 and 4160 on the other side. So
sales. Yeah.
Sales and HST on sales, and then we have to add them and then put them in the debit side. January 17th. Issued a credit note to John Torino for a shortage in shipment on invoice number 129, $28 plus HST of 364.
Mm-hmm.
So basically, instead of accounts receivable, we're going to credit that account. So sorry, we're going to sale.
Torito. Which one is that?
No, this is the one right above on January 16th, I think.
January 16th.
Yeah.
Yeah. This one you are going to reverse it.
Yeah.
But this is instead of sales, sales returns, you have to put the sales because you didn't give the items, right?
Okay.
Yeah. It's not return. This is the shipment problem missing in the shipment. In this case, you don't have to use sales returns. You can use sales.
Okay. January 19th. Received a check from JD North to cover the sale dated January 4th, less the credit note. So January 4th, you go outside the sale.
Yeah. 5.8. The next one is 45.50 on 5th. January 4th.
You just have to subtract the 2.
And 5th, yeah. When you subtract this, yeah.
And then we'll debit the bank account.
You received that much and account receivable. JD notice for 63.30.
January 20th. Sold merchandise to Bravo Co. $800 plus HST of $104. Invoice number 130. Terms 2/10 and net 30.
Mm-hmm.
So this will be accounts receivable.
Mm-hmm.
So we're going to debit accounts receivable on the credit side.
Mm-hmm.
HST on sales plus
sales and HST, yeah.
January 21st. Sold old computer to Mary Hector for cash, $250. So we'll debit the bank account.
Mm-hmm.
And then for crediting,
other revenue.
other revenue? Okay.
They give a different account name, other revenue. Yeah. This is not the business activities. This is they are selling the old computer. Yeah. This is other revenue.
January 25th.
Mm-hmm.
Received a check from Bravo Company with 2% discount of the price for early payment. So this is from January 20th.
Mm-hmm.
So we have to calculate the discount. So
discount only discount. $800. Yeah.
So we're going to debit accounts receivable. Sorry, we're going to credit accounts receivable.
Mm-hmm.
Purchase discount will be the debit side.
Yeah.
As well as
you are going to receive minus discount. In that case, bank.
Okay, sales discount.
Yeah, bank and discount in the debit side, and the account receivable in the credit side. Now I understand returns, sales returns and purchase returns, right?
Yeah.
Good. We are going fast.
Yeah, a little bit too.
Yeah. Because you people are accountants, it's easy. Easy for me and easy for you too. Sometimes it's boring for you, right?
Not boring. We need to practice. Maybe it is difficult right now using the virtual class. However, when I practice again, I can practice again, it should be better. Yeah.
Okay. Okay. Thank you so much.
Mhm.
After you finish, we can go back to 6-column worksheet. Do you know about 6-column worksheet? In the real life, did you prepare 6-column worksheet?
No, I didn't.
About the other people?
Sorry, Matilda, I have a question.
Yeah.
When I'm looking for a job and some employer ask you are a valid accountant in Canada or no. I just wondering after this course we are the valid accountant in Canada or no, or we need to get a certificate from CPA or the same certification or no.
Actually, not all the companies they are going to ask for the CPA. But if you have a qualification from your country also, they will recognize. But if you register for CPA, that's also good. Not necessary to have CPA for all the companies. Okay, now I'm going to show something about 6-column worksheet. It's like a trial balance, income statement, balance sheet, everything in one sheet. That one is specially for owners, partners, investors. If they want to see about the history of our business, they would like to see this one, 6-column worksheet. Auditors, they also are using 6-column worksheet. At the end of the year, they are preparing this 6-column worksheet to do everything in one sheet. I'm going to
Today we're going to start looking at the 6-column worksheet and understand a little bit more about why we use the 6-column worksheet and what items are included in the 6-item worksheet. The 6-column worksheet. So what you see here is an example of a 6-column worksheet, or at least the start of it, for Roadrunner Delivery Company, which is the company that we've been using as an example throughout the first quarter of this course. So you'll notice that the trial balance has been added into this worksheet already. But what I first want to point out to you are the 5 sections of this 6-column worksheet. So what we have first are the 3 columns up, or the 3 rows up top. This is called our 3-row heading. It includes the name of our company, what we're looking at, which is our worksheet, and the accounting period that we're looking at. So, for example, this accounting period is for the month ending October 31st, 2013. So this is kind of like part 1 of our section 1 of our 6-column worksheet. Section 2 includes our account numbers and account names. And you'll notice that these are in order: assets, then liabilities, then owner's equity, then our revenue, then our expenses. And each of the accounts that are listed in our chart of accounts are included on this trial balance, or on this section of our worksheet. So this is section 2, the account number and account name. Section 3 is our trial balance, and it includes a debit column and a credit column. Section 4 is our income statement column, which includes a debit and a credit column. And also then the last section is on the balance sheet section, which includes a debit and a credit column as well. The whole purpose of this worksheet is to start to compile information that is going to be included in the financial statements that we're going to prepare later. So typically, the work that you have been doing, the tedious stuff that some of you haven't really enjoyed, that's usually done by a company's bookkeeper. Now, the financial statements are done by a certified public accountant, okay? So this gets a little bit more high level. This stuff is written for the investors as opposed to the managers within the company. So let's get started here. As you notice, we've got our trial balance filled in. We have done the trial balance a couple of different times. You know how to do the trial balance. Any asset account or anything that has a normal debit balance, we put our ending balance here on the debit side. Anything that has a normal credit balance, we put our ending ledger balances in the credit column. And the whole goal of our trial balance is that these two columns, both the debit column and the credit column, are going to be equal. And if they're not, we have problems, right? And we have to go solve those problems. Now, the two new columns that you're going to see, or the two new sections, are the income statement and the balance sheet. Now, there are certain items that are included on the balance sheet and certain items that are included on the income statement. What's included? I'm going to skip over to the balance sheet first. The items that are going to be included on your balance sheet are going to be your assets, your liabilities, and your owner's equity. So we have everything from the 100s to the 200s to the 300s, okay? And basically, all we're going to do is we're going to copy the debit and the credit column from that section, and we're going to paste it over on the balance sheet, okay? So we are only going to look at our permanent accounts, our asset accounts, our liability accounts, and our owner's equity, okay? And our owner's equity does include withdrawals. Now, for our income statement, we are going to take our temporary accounts, or our revenue, and our expenses. So we are going to take the 400 and the 500 numbered accounts, and we are literally going to copy and paste them over in our income statement, okay? Now, we need to figure out what the totals are for these rows, right? Now, do you think they're going to come out equal? Well, let's find out, okay? So, if we add up, and I'm just going to use a formula, okay? And I'm going to use this same formula that I used over here, the sum of H7 to H22. And I'm going to use something similar over here. Now I am in column J, so I'm going to do equal sign, sum, open parentheses, and I'm going to add these four together, okay? That way, if any of these change, if I notice that there is an error, it will automatically change this number. So right now, I have $1,500 worth of expenses. These are my four expense accounts, and I have $1,500 worth of expenses, okay? I am going to take this amount up here, this $2,650, and I'm going to bring it down here, okay? Now, these do not equal each other, but I'm not overly concerned about that just yet. I'm going to do the same over here. I'm going to do equal sign sum, and I'm going to grab everything that shows up in this column, okay? And I come out to $38,275, okay? And I'm going to take the same formula, and I'm going to apply it here. Formulas are so easy because it allows you to not really think about a whole lot here, okay? Now, we notice that our income statement and our balance sheet, and I'm just going to add a line down here at the bottom. You'll notice that our income statement and our balance sheet, the debits and the credits do not equal, but that's not to be too concerning just yet. So now what we want to do, we're going to focus on our income statement section, and we're going to try and find out, do we have a net income or do we have a net loss, okay? Now, net income basically tells us the amount of revenue that we've received after all of our expenses are subtracted, or after all of our expenses are paid. So what we're going to do is we are going to skip a line down here. After our utilities expense, let's skip a line, and let's put in net income, okay? And we're going to be looking at what our net income is for this accounting period, which is the month ending October 31st, okay? We are going to enter our net income into the debit side, or the debit column of that income statement section, okay? So in order to find what net income is, we are going to take our revenue minus our expenses, okay? So I'm going to do a simple formula in here. I love formulas, okay? I'm going to do the equal sign, and I'm going to click on my revenue minus my expenses, okay? So what I came up with is that I have $1,150 worth of net income, right? My revenue is greater than my expenses, okay? If my expenses were greater than my revenue, I would have a net loss, and my net loss would be in the credit column of my income statement. But since I made money and I have net income, we're going to put that in the debit section, okay? Now, we are going to take this same amount and we are going to put it in the credit column of our balance sheet. And I'm going to tell you why in just a second. But I'm going to use a formula, equal sign, just click on the cell and hit enter, okay? So you've noticed I've got net income that's highlighted right here in the debit section of my income statement. And I've also got net income over here in my credit side of my balance sheet. Now, why do I put it on my balance sheet? Let me tell you why. I'm going to click over here to my second tab, and I'm going to look at the effects of net income or net loss on capital. Basically, we said that net income is revenue minus our expenses, okay? Revenue and expenses are typically temporary accounts, right? During the month, we consider them to be temporary. Well, at the end of an accounting cycle, we transfer those over to our capital, okay? So our net income is increasing our claim in the business. So we are increasing our capital. Since our revenue is greater than our expenses and we have net income, it's increasing our capital. Now, if we would have had a net loss, which would have meant that our revenue is less than our expenses, it would decrease our capital, okay? Since we know that our capital is increased on the credit side, that is why we enter our net income on the credit side. Because our owner's equity or our capital account is increasing because we have more income, okay? Now, all we need to do now is we need to double check our accuracy and we need to total up our columns, okay? So we're going to add another line below these columns. I'm going to do this up at the top here. And basically, all I'm going to do is I'm going to total my columns. So here again, I'm going to do equal sign sum. I'm going to grab everything below the line ahead. And I've got 2650. And what do you notice? That's our total up here in the credit column. So again, I'm just going to bring that number down. And we've got items that equal each other, right? Now let's try it over here on the balance sheet. If we take the sum of these two columns here, we've got 26,550, which does not equal what we have here. So we've got to go back and we've got to figure out, what's our problem here, okay? And it looks like, if you look at this amount here, it looks like all I did was I took the sum of cell P15, which is this cell here, okay? So I want to take this formula right here and I want to correct it. I want to do the sum of all three of these columns together, okay? So all I did was I changed that formula, and what do you know? It comes out to 38,275 down here because I had my formula and I changed this cell plus this cell, it automatically changed for me, okay? So now what I'm going to do is just bring down this number here, and we've got two columns, our debit and our credit column, that now equal each other, okay? So what we have done is we have used our trial balance, which we had already had before. Instead of having it on its own spreadsheet or its own section, we just added it into this 6-column worksheet. And what we did was we extended or we transferred our assets, liabilities, and owner's equity over to our balance sheet, okay? Literally, it's a copy and paste. We're just extending those numbers over. And remember, these are our permanent accounts. So when you think of balance sheet, think of permanent accounts, okay? And what we did was we took our 400 and 500 numbered accounts, which are our revenue and our expenses, and we moved those over to our income statement, okay? And when you think of income, you got to think of revenue minus expenses. And all we did was we transferred these over to the income statement section, okay? So when you think of income statement, I want you to think of temporary accounts for our revenue and our expenses, okay? In order to get our net income, we simply took our revenue and we subtracted our expense accounts. Okay? Since we have more revenue than we do expenses, we have a net income. Remember, if it were the opposite, and if our expenses were greater than our revenue, we would have a net loss, and we would need to put that in our credit column. But let's be happy that we've got some income here. Remember, that net income gets transferred over to our owner's equity account, okay? And since we need to increase our owner's equity, we are placing it in the credit column of our balance sheet. Once we have our net income on our income statement and on our balance sheet, you'll notice that we balance out our two columns, our debit column and our credit column. So what I want you to do now is I want you to take the numbers that you have from your mini project, and I want you to create a 6-column worksheet.
I think now you understand about 6-column worksheet, right?
Yeah, it is. Can you send that video for us?
Yeah.
If possible?
Yeah.
Okay.
And everybody understand the 6-column worksheet. Did you work with 6-column worksheet in the real life in your past experience?
No.
Okay. But actually, for the auditors, they would like to have 6-column worksheet to do the adjustments. They include another 2 columns and do the adjustments. That's it. And especially partners, owners, they want to see about everything in the one sheet. That's what we are preparing the 6-column worksheet. There's an exercise, 6-column worksheet 4-1. They give a trial balance, and we are going to prepare the 6-column worksheet from this trial balance. And you have the worksheet also for the 6-column worksheet in your worksheet, right?
Yes, it is.
Yeah. I'm going to prepare now. Oh, are you tired for 2-3 exercises?
I think so. It is enough, in my opinion. If everybody wants to continue, I can continue.
Okay. If it is enough, you can try this at home. I will send the answers. Okay. And also the other side, page 40. That one also about 6-column worksheet. You can try that one too.
The homework, okay?
Yeah.
Okay.
Ledger and the 6-column worksheet. And if you have any questions, you can bring it on next Tuesday. I am sorry, Friday I have dental appointment. That's why I couldn't able to make the class.
No problem. Okay.
Okay. See you on Tuesday, next Tuesday.